Have you ever wondered what's really going on inside a major corporation? Well, today we're going inside the annual report of Yatharth hospitals. And trust me, this is way more than just numbers and boring corporate speak. It's their entire game plan laid bare. We're going to peel back the layers and see what's really driving one of India's biggest healthcare players.
So first things first, let's get a sense of scale here. Yatharth isn't just some local clinic. We're talking about a major super specialty hospital group, a real powerhouse in North India. And that scale is important because how they operate, well, it tells us a lot about where the whole private healthcare industry might be headed. So that's the big question, right? What's the real story hiding between the lines of all that official language? That's exactly what we're here to figure out. We're going to check this company's vital signs by dissecting its annual report piece by piece. And when you're checking a company's health, there's no better place to start than the money. So let's put on our scrubs and check the financial vitals. For any business, this is where the rubber meets the road. Are the books in good shape? Well, the annual report gives us a surprisingly clear and frankly pretty impressive answer. Okay, check this out. This is the main story right here. We're looking at their consolidated revenue. That's basically all the money they brought in from all their hospitals combined. And just look at that jump. Going from about 6.7 billion rupees to over 8.8 billion in just 1 year? That's not just growth. That is a massive leap forward.
A 31.31% increase. I mean, wow. Even the report itself calls this impressive. A number like that tells you so much. It's not just about more patients. It signals that their expansion is working and that they're running a really tight ship. The big takeaway here? Their financial vitals are looking incredibly strong.
So, you're financially healthy, you're bringing in a lot of cash. What's the next move? You grow. So let's look at their blueprint for expansion and see how they're putting that money to work. Now, this is really smart. They're not just throwing darts at a map and building a hospital wherever it lands. No, they're focused on what they call existing clusters, like the National Capital Region. And why do that? Well, because people there already know their brand, they already have a network of doctors. It lets them get new hospitals up and running and profitable way faster. It's all about density and dominating a territory they already know inside and out. And they've got this down to a science. They have a clear 3-step playbook. Let's use their recent acquisition in New Delhi as an example. Step 1, buy the building. That cost them about 160 crore rupees. Step 2, fill it with the absolute latest and greatest medical tech. And then step 3, bring in the expert medical teams and get them trained up. It's a methodical, repeatable formula that they can use again and again. But you know, a truly brilliant strategy isn't just about what you hope will happen. It's also about knowing what could go wrong. And they've clearly thought this through. They've identified the big potential pitfalls, dealing with government red tape, finding and training top-tier talent, the simple fact that it takes time to fill up a new hospital, and just how complex it is to get everything working together. Acknowledging these risks, that's the sign of a mature, realistic company. Now, all that expansion we just talked about, it's not just powered by money and a good strategy, it's also being driven by a deep, deep investment in technology. Let's take a look at what's at the very core of their hospitals. This right here is the Da Vinci surgical system, and it is a total game changer. Honestly, think of it as giving surgeons superpowers. It allows them to perform incredibly delicate operations with a level of precision that's just not humanly possible, all through tiny little incisions. For the patient, that means less pain, a much faster recovery, and safer surgeries. It's amazing stuff. And this high-precision tech isn't just for one thing. This is the Mako system, which is used for robotic-assisted knee replacements. By making sure every implant is placed with near-perfect accuracy, it can totally change the outcome of the surgery, slash recovery time, and, lead to much, much happier patients. Of course, you can't have world-class treatment if you don't have a world-class diagnosis to begin with. And that's why they're also investing in top-of-the-line gear like this 1.5 Tesla MRI. It gives doctors faster, incredibly detailed images, which is the foundation for any good treatment plan. It just goes to show that for Yatharth, tech isn't some fancy add-on. It's absolutely fundamental. But the story an annual report tells isn't all about profits and shiny new machines. To be a successful company today, you have to be about more than that. So let's pivot a little and look at their social and ethical side. They make a point of saying their mission goes beyond the hospital walls. And you can see it here. They're running free health camps, they're teaching health education in schools, they're partnering with other companies on wellness programs. For a private hospital, this is not only good, it's smart. It's about shifting to prevention and building real, deep trust in the community.
And that sense of responsibility goes even wider. On the environmental front, they're investing in solar power to shrink their carbon footprint. And from a governance perspective, basically how they run the company, they're emphasizing their strict code of ethics and protections for whistleblowers. It's a really clear signal that they're taking ESG, that's environmental, social, and governance, very seriously. And if you want to hear it in their own words, this quote, pulled straight from the report, just nails it. They want to strike a careful balance between making money and making a difference. I mean, that's a really powerful mission statement for the kind of company they're trying to build. So we've looked at the money, the growth plan, the tech, and the ethics. We've covered a lot of ground, so let's pull all of these threads together and issue our final diagnosis. After digging through all those details, all those numbers and statements, what's the simple, clear takeaway from this entire report? What's the real big picture here? You know what, it really boils down to 4 key things. 1, they are financially rock solid, thanks to that huge 31% jump in revenue. 2, their growth isn't just happening by accident. They have a clear, disciplined plan they're following. 3, they are betting big on cutting-edge technology to provide better care. And 4, they are working hard to build a brand that stands for more than just profit. And all of that leaves us with the one big question looking forward. The growth is absolutely undeniable. But as this healthcare giant gets bigger and bigger, can it really maintain that delicate balance it talks so much about? Can it keep both its shareholders happy and take care of the communities it serves? How they answer that question, well, that's going to define their entire future.